The weekly market statistics are in, and buyer demand was considerably higher this last week than it was the previous week, but it wasn't enough to stave off that steady rise in the number of active listings, the supply of active listings to purchase in the metro area. I'm Ron Milligan with RE/MAX Select here in Portland's Pearl District, and of course I've got the latest market statistics for you for the full metro area. That includes everything on the Oregon side and also all of Southwest Washington. So let's start with the supply of active listings. The number is up versus the previous week, 5,301 versus 5,035. You can see by looking at this chart here that the number of active listings has been on a steady rise and a significant rise. But one thing that I did do in the video previous to this, so you can go check that out, is I took our June market numbers. Now keep in mind that these are numbers that come from RMLS, and they are only for the Oregon side of the metro area, so the numbers will be a little off from what I'm quoting you right now. We have a different sampling that we've been drawing from in the office. But what I did is I plotted those numbers back for every June going back 10 plus years. I think it went back to 2007, so that we could kind of see where we should be compared to a more normal year. Because when we're comparing to last year was the probably hottest seller's advantage market that we've ever seen in the Portland metro area. So maybe looking back at the years 2014, 15, 16, 17, 18, maybe into 19, gives us a little more context for a more normal year. But do keep in mind that those years that I just listed off were all seller's advantage years. Those are not buyer's advantage years. Those are still seller's advantage years. Less so than what we experienced in the last last year and a half, but still seller's advantage years. So the point of that is when we compare our number of active listings this year to the same time last year, that's where we get numbers with like a 61.7% increase in the supply of active listings available for buyers to purchase, this year versus last year. So I did mention that buyer demand was higher. That was good to see. The number of new pending transactions that went under contract this last week, 749. That's good compared to the previous week where that was 642. And that 749 number is pretty good when we look back the last 5 or 6 weeks. That's kind of where we've been in that range. However, when we look at the previous 3 months to that, the numbers are significantly higher, but that shouldn't be too much of a surprise. That shouldn't be too disconcerting, simply because typically our busiest months are like April, May, and June. That's when we have the most volume, and that's typically when we see the highest purchase price for any given year. Well, any given typical year. And then once we get to the summer, people go on vacation, and we tend to see the market cool off a little bit. So maybe it's not quite as disconcerting to see that this number is below where we had been for those previous 3 months. So looking at the number of homes that sold, the number came in at 646, which was higher than what we'd seen the previous week, 542. And that's a pretty good number, again, for the last, 6 to 8 weeks. Prior to that, the numbers were a little bit higher. I think for a while there, what we had been seeing is numbers around 700 plus or minus like 50. So, we're kind of creeping up in that range, but when we look at the last 6 to 8 weeks, we're kind of below that number. So not a terrible number, but comparing it to the previous week, maybe not a fair thing, because that previous week was 4th of July week, which was a week with a holiday in it, and we had fewer days to record transactions with the county, and the title companies obviously were closed as well. So price reductions, I've been tracking that recently. We did have a lot of price reductions, 835, and of those, 773 still remained active as of Tuesday morning, and only 62 of those went under contract. Bumpable buyers was down. Previous week it had been 90, it was down to 85. I don't know, and I haven't gone through to look to see whether or not those are going from bumpable to pending or bumpable back to active. So bumpable to pending would mean that the buyer who was buying their home got a contract on their current home, so now they can perform on the purchase, and it goes from bumpable to pending. Bumpable to active would mean that they hit the drop dead date in their contract, which said, hey, at this date, we'll wait for you to try to sell your current home, but at this date, we're going to go back to the open market and we're going to go our separate ways, and then you can try to sell your house and maybe come back to us later. So I don't know which direction those are moving in. The days on market, 15, that was down from the previous week. That was 16 the previous week. Last year at this time, the days on market was 18. The median was 7, up from the 5 that we had been seeing consistently and 6 recently, and now we're at 7 compared to last year, 5 median days on market. Average sale price came in at $632,804 versus last year, roughly the same week last year, $585,628. That's an 8.1% increase in the average sale price. Again, small sampling. Last week, that number was 9.9. The number tends to be a little volatile, but it's something that we just kind of watch over the course of the month to see where we're going to land. So not a terrible number, and probably in line with where we should be, or where we've been projecting that we're going to be and in this year. The median came in at 10.5% higher this year versus last year. Average sale price, so on average, sellers got 99.9% of their original asking price. So they might have done some price reductions in there, done something like that, but the final sell price came in at 99.97% of their original asking price. And then last year, that same number was 102.76. So sellers are definitely getting less for their homes. It's not a big surprise. We're not getting multiple offers on every home. We are still finding areas and segments of markets where sellers are still getting multiple offers and going over the asking price, but they're not going way over the asking price. They're going slightly over. And in a lot of cases, buyers are getting properties at asking, if not less than asking. So sometimes if a property's been sitting on the market for a week or two, you can get a property under the asking price. One thing that I thought was interesting is I'm always tracking the new listings. It's a hard number to track. And I did see that this last week we saw a lot of new listings on the market. The number was higher than it had been in previous weeks. But what I also did, because I was thinking about this, a lot of times agents, in order to get a listing to pop, again, on all of the search engines that are out there, your Remax, your Realtor.com, Zillow.com, so on and so forth, to get the listing to pop on all of those searches again and get eyeballs on your listing again, sometimes what the agents will do is cancel the listing and then immediately relist it. Same information. They might rearrange the photos a little bit. They might change the data a little bit, but they'll relist it immediately. It'll show up in everyone's searches again. You get lots of eyeballs on it. And that, in our statistics, actually looks like and counts as a new listing, even though it's not. So I did take a look, and there were 177 cancellations, which is the function that you would use in the MLS to do what I'm talking about. And I just did a quick sampling of 10 of those listings to see how many of them had been relisted and how many of them were truly canceled. And the number was 8 of the 10 had actually been relisted. So again, it's a tough number to track, the new listings, so I'm always waiting for RMLS to give us the accurate number once the market statistics come out, usually a couple of weeks after the end of the month. So what do we have that we're watching out for? Well, next week the Fed is meeting on the 27th and 28th. They have been promising that they are going to raise the Fed funds rate 3/4 of a point. So far this year, everything that they promised, they've delivered on, and that's compared to previous years when they'd say they were going to raise the rates and then they would kind of freak out and change their minds. But we suspect that what's going to happen is next week they're going to raise that funds lending rate, and the result of that is going to be, again, probably that knee-jerk reaction where lenders will kind of stress out. This will scare them a bit. Interest rates will probably go above 6, and then hopefully the same pattern that we've been seeing in the past is that incrementally they'll start to drop back down, maybe to the mid fives or something like that. So we'll see what happens with that. Of course, that's 2-3 weeks in the future. I think that's going to have an effect on the number of transactions that we're going to be seeing, not next week, but the week after. I'll just keep you apprised and let you know what's going on. And then, as always, all real estate is local. If you've got questions about what's going on in your neck of the woods or your segment of the market, feel free to reach out to me. I'm always happy to share what I know. And as always, I would love it if you gave us a thumbs up or subscribe to the channel or share it with someone you think might find this information useful. And we'll see you next week.